Hello investors, my name is Dehan and welcome back to your number one place for all your investing needs. In today's video, we're going to be discussing the top 5 stocks for the second week of December. Obviously, these are going to be stocks that are going to be benefiting from the reopening of our economy as we are getting closer to a vaccine. We have Pfizer that's going to be releasing some data on December 10th, and that could potentially be the vaccine that we need. We already have the UK already, giving out their vaccines to the people in their country, and now the United States is, hoping to have some by the end of this year. So that's something we're going to be looking forward to in the next few weeks. Now, as you can see, Pfizer here with some positive news in the past, 5 days. The stocks went up from about $37.88 all the way up here to a high of about $41, and we consolidated a little bit back here, but we're continuing to go. But if we look here, the stock is hitting all-time highs right now and continue to make new highs and new highs, because they're going to be probably the one that is going to be the main competitor to have their, vaccine for the people and hopefully reopen up our economy. Now, the stocks that are going to be benefiting from this, well, that's what we're going to be discussing right now. But before we discuss that list, go ahead and smash that like button for me, guys. Let's try to get 50 plus likes on this video. It shows me that you guys appreciate this content and that you guys want to see more content like this. We just hit 10,000 subscribers, so if you're not subscribed, go ahead and subscribe to the channel and turn on that bell notification so you get notified every time I make a new video. I make videos on penny stocks, hot stocks, growth stocks, dividend stocks, you name it. If you can name it, I'll make it. So if you guys are interested in that, stick around and let's get into the list. So the first one is going to be Disney. So you guys know this one, ticker symbol DIS, currently trading at $154.14. It literally just hit an all-time high this week. So this stock is the highest point it's ever been. Now, if you guys, take a look here, when the Rona happened, this stock went down to about $85 per share. So if you guys bought into this one, you're almost at about 90% gains for the year if you bought it at the low. Now, obviously, this one is a major player with the reopening. So if it reopens, Disneyland, all these other places, people are going to start going. If people get the vaccine, that means people are going to be going out more and people can start living their lives like we used to back in the day. And that is something that Disney could definitely benefit from, even though we have Disney Plus and they're making money from all that. But we need to have ESPN and we have to have, basketball games and different sports activities happening on so Disney can continue to make more revenue. Now, this one actually is a dividend player as well. It has a dividend yield of 1.14%. Now, they did suspend it while the coronavirus was going on. So now, obviously, we're hoping that people can continue to receive the dividend once everything goes back to normal. This one has a market cap of $279.07 billion. If we take a look at Disney's previous earnings in the quarter, it was on November 12, 2020. EPS actual was negative 20 cents per share, beating by 45 cents. Their revenue was about 14.71 billion, beating revenue by 611.09 million. If you take a look over here, the next quarter is going to be in February 4th, 2021 estimated, and they're estimated to have revenue of about 15, almost 16 billion, so a little bit higher than this quarter. So that's what we're going to be looking forward to see how the earnings are going to go into 2021, and hopefully with the vaccine, the quarters can continue to be better and better and throughout 2021, and Disney can start to ramp up again. As you can see, the stock has been running up because they're hoping that the economy starts to open up, and that's why the stock is now at an all-time high. Here, just a month ago, it was trading at $120 per share, so it's already up about $34 from that. And I think that Disney is one of the ones that is going to benefit greatly from this vaccine. So Disney is definitely needing this, and that's what we're looking forward to. And I think that Disney is a great buy. The number 2 pick for the month of December is going to be SBUX, which is going to be Starbucks. So this stock, we have, the Starbucks event that's going to be happening on, I believe, on Thursday this week. So in this event, they're just going to be releasing some data. Obviously, this stock is trading at about $102.28. It just had a price upgrade this week, so that is another positive thing. It hit an all-time high of about $102.94 as well. So if we take a look here at the last 5 days, the stock is up about 3.67% in the past 5 days. In the past month, the stock's up about 13, almost 14%. The last 6 months, 29.9%, and then year to date, about 16%. Down here, it was trading around $55 per share, so it's almost about 100% gain if you bought here at the low when the Rona happened. So obviously, Starbucks with the economy potentially reopening back up, people are going to be going out and getting their coffee, because what is one thing you're going to say to your friend after all this? Hey, we've been locked up for months and months. You want to grab a coffee and, catch up with each other? And you're going to go to Starbucks and get your little coffee. You're going to sit down in the little cafe and you're going to discuss some stuff with your friends. So you're going to hang out with your friends. You're going to grab a coffee and just relax. So that is why Starbucks is booming right now. It's going to continue to boom. Now this one has a dividend as well. It's about $1.80 per share. The yield is 1.76%, which is pretty decent, and a market cap of 120.05 billion. Now, one thing to make sure about Starbucks is in China, the economy and the everything is already booming. So Starbucks is booming over there right now. So they're already growing, and that's why Starbucks is going to continue to go. So it's about 45 cents per share that we're receiving dividends from Starbucks. Their 4-year average yield is about 1.9%, which is pretty decent. If we take a look at their dividend growth for the past 10 years, they've had growth currently at about $1.68 per share. Their dividend history, obviously, it's a quarterly paying dividend. So every single quarter, Starbucks is going to be paying out about 45 cents. And then if we look at their dividend safety, we like to see a lower dividend. Obviously, dividend safety about 50%. This one is at about 64%. So it's still pretty decent, but we like to see a little bit lower. So I definitely think that Starbucks is going to have some huge potential with the vaccine coming out in the near future for us and the reopening of the economy. Now, before we get into the third pick for the second week of December, make sure you smash that like button like we said and subscribe to the channel for more content, and leave a comment below. Are you buying any of these stocks? What do you guys think about the vaccine that we're potentially going to have and the reopening of the economy? Do you think these stocks are going to be booming or what? And with that potential vaccine, at our number 3 spot, we have CVS, obviously ticker symbol CVS. So this one is one of our health stocks. So this one, you can see here, the stock was trading around $55, and it's just been booming and booming, as they're going to be one of the main ones that's going to be, giving out these vaccines and just having different things, different tests coming out for people. CVS is going to be booming in the near future, and with the reopening of the economy, need CVS there, and that's why this one is on our 3 pick. This one has a dividend actually of $2 per share, 2.68% yearly, market cap of 97.51 billion. We have a dividend of 50 cents per share. If we look here at their dividend yield, obviously average yield on the 4 years is about 3%. Right here we have their dividend, and it's going to be about $2 per share, not too bad. Dividend history also is pretty decent, as they've been paying out about 40 cents, about 50 cents right now per quarter, and their dividend safety right here for CVS is going to be about 26%, which is not too bad. If we take a look at the stock in general and just look at their earnings in the previous quarter, the stock, is doing pretty decent, even with everything going on right now, because it is a healthcare stock, obviously. So they are, testing people, and they're doing different things. But if we take a look right here at their earnings for the previous quarter, we're going to see a couple of different things. So we're looking here at November 6, 2020. EPS actual was $1.66, beating estimates about 32 cents. Revenue was at about $67.06 billion, beating the revenue by $489.75 million, which is, $500 million right there. That's a lot of money. And then the next quarter is going to be in February 11th, and this one is EPS estimate of $1.24 with revenue at about $68.6 billion, so a little bit higher than this quarter. So that's something we're going to have to be looking forward to. But I think obviously with more testing and more vaccines, CVS is going to greatly benefit from it, and hopefully continue to make some nice highs, as the stock was trading down here at around $51, $52, and it was trading at almost that exact price just about a month and a half ago, less than a month and a half ago. So we've had this great boom up here, about $20 per share, and we're hoping that it continues to run up, and maybe in 2021 this stock could potentially hit $90 per share plus. The number 4 stock on our list is going to be SPG, which is Simon Property Group. So a lot of you guys might not be familiar with this one, but this one is trading at $93.91. Year to date, this one is actually down about, in the past year, 37%, obviously. Obviously, this is going to be one of the stocks that you follow, especially if you're into REITs. So if you're following, Realty Income, ticker symbol O, or Store Capital, you probably know this stock. So this one was trading around $142 up here, high. Pulled back down all the way down here to about $42 per share. Great buying opportunity, especially since this one has a beautiful dividend. Now you can see here, once we got some news that the economy might be opening back up, with vaccines possibly coming out in December already, this stock, traded around $63 in November, and now it's trading at $93. So it's went up about $30, which is about 50%. It's had a 50% gain in the past month and a half. As you can see here, 1 month, 50.79%. Had a huge jump here from $61 all the way to $75, and it's continuing to make these, higher highs right now, and hopefully we can continue to go up, especially if the economy opens back up. The dividend rate on this stock is $5.20 per share. The yield is 5.54%, very high yield. Market cap of $35 billion. If we take a look here at their dividend, $1.30 per share. Their dividend yield, 4-year average yield, is about 5.91%. So the yield is very high. So if you guys are dividend holders, you definitely want to look at this stock. It pays about $8.30, like we already said. And then the dividend history, This one pays out every single quarter, which is about $1.30. Previously, it was about $2.10. Obviously, we had to cut back a little bit. Their dividend safety is going to be 56.05%, which is not bad at all. If we take a quick look at the earnings for the previous quarter and what we have to see in the the next quarter, we're going to see that this actually stock, obviously it didn't benefit from the coronavirus, as a lot of these properties that they own and a lot of the malls were closed. With them being closed, obviously a lot of them weren't paying rent, and that's why this one did not it did not do so well. So revenue, they missed by about 94 million. They're hoping for revenue about 1.16 billion the next quarter, which is going to be at the end of January. So Simon Property is definitely one that I myself like to have, and I actually did trade this one in the past. If you're a REIT investor, I would definitely take a look at this one. Beautiful yield, and just a general, reopening the economy stock that you want to have in your portfolio. Last but not least, you guys are going to be like, whoa, why do you have Square on here? Well, it's going to be Square, ticker symbol SQ. The reason this one is on here, even with the economy reopening back up, is because we're moving to that digital space pretty much and just using digital things. So PayPal and Square are both great stocks. We're going to discuss Square in this video, but PayPal is also another, great one that's going to benefit from this, especially since they're starting to mingle a little bit with the Bitcoin. That is another huge reason why these stocks are moving. If we take a look at Square, it's trading at $208. When the Rona happened here, it was trading at $38, $39. That is insane. $40. Let's say this stock 5x'd in the past, 7-8 months. That is crazy to think about. If you had Square here at about $40 per share and you're still holding, wow, pat on you on the back, because this stock is doing amazing. If we look year to date, 232.72%. This stock just continues to go up. It does not stop. And that's why we have Square on here. There's no dividend for this one. Market cap 93.86 billion. If we take a look at earnings, they had earnings on November 5th, 2020. EPS actual was 34 cents per share, beating by 18 cents. Revenue at 3.03 billion, beating revenue by 954 million, almost a $1 billion beat. Those earnings literally hit that baseball and it hit a home run, because almost a 1 billion beat, that is huge. In the next quarter, February 23rd, they're expecting to have 3 billion, in revenue, matching the previous quarter. I'm thinking that it's going to blow that out of the water, especially since we have Christmas, we had Thanksgiving, we have all these different holidays, the New Year, Black Friday. A lot of people are buying different things. So in my opinion, I think that Square and PayPal are going to be doing tremendously in this next quarter. They're going to make a lot of revenue, a lot of profits, because people are going to be buying these things online instead of going in person. I already saw this impact that, from the Rona on Black Friday. I did not see as many people out in the stores, and a lot of stores were actually closed on Black Friday for once, which was, crazy to see in my opinion. So I think that Square and PayPal are definitely going to benefit from this in the next quarter or so, and even just in the future going on. So Square is definitely a great stock in the portfolio. So I hope you guys enjoyed this list. So this is going to be the list for the second week of December. These 5 stocks are the stocks that I'm going to be looking at for this week, and just in general for the reopening of the economy. We're going to see what Pfizer says about their vaccine this week as well. So that is another big piece of news that we're going to be looking out for. Obviously, we have stimulus news that could potentially come out on Monday or some other days if we're getting closer or if we're not. Right now, the market is at an all-time high. NASDAQ, S&P 500, the Dow Jones, they're all destroying the all-time highs right now. So down here we had this great dip that we've the fastest dip ever that I've seen, in my opinion. We've been able to recover from that in the past 7 or 8 months, which is amazing. Right now we're hitting all-time highs. The economy is booming. If things start to reopen back up, I believe that these are going to continue to go up even in 2021. So if you guys enjoyed this video, smash that like button, subscribe to the channel for more content, leave a comment below. What stocks are you buying right now? What stocks are you selling? Are you buying any of these on the list? Also, I'm not a financial advisor, so if you guys are investing into any of these stocks, speak to your financial advisor before investing. Don't, buy these stocks based off of my opinion. Do your own research. Do some paper trading before investing with your hard-earned money. I hope you guys enjoyed it, and I hope to see you guys next time. Goodbye.